This is 4200%. Build, scale, sell. The playbook for entrepreneurs who mean business. No fluff, no theory, just bold moves, real strategies, and the unfiltered truth from founders who built it, scaled it, and sold it. If you're ready to grow fast and exit strong, you're in the right place. Welcome back to 4200% Build, Scale, Sale. I'm your host, Anthony Gerasi, and I'm excited to introduce to you Ben Fertig, CEO of Constructive Capital, and he has scaled multiple businesses. We're going to talk about it all, and Ben, I'm just happy to have you here. Thank you so much for coming.
Yeah, it's great to always catch up anytime I get the opportunity.
Yeah, thank you, sir. So I always love to start with, building a business, I think, takes a certain personality, and you are no different. How did it all begin for you? What was the beginning for getting into business or just even anything early on you can talk about?
Yeah, it's funny. So after I graduated from the University of Minnesota, I spent about 6 weeks trying to play hockey professionally and realized that wasn't going to work out. It would be an understatement. So I came back to Minneapolis and started to apply for jobs. And interestingly, I applied for a lot of financial related jobs, a finance position at Caterpillar at the time. They had a big presence in Bloomington, Indiana. There was a boutique financial advisory there. Mm-hmm. So, I put the resumes out. You did it by fax back then, not to date myself. I send these resumes out. I think it was a Monday morning or something. In a couple of hours, I get a call from this company. So got your resume. I want you to come in for an interview. I'm like, okay, who are you guys? It's a mortgage company. I don't know what a mortgage is, right? Okay. So interestingly, I go in the interview and, it was the branch manager at the time. I was interviewing for a loan officer position, and which was generally just a salesperson position, right? Yeah, we had a good rapport. We're talking. He's explaining what mortgages are to me. And, he's going through my resume towards the end of the interview, and he says to me, because I talked about all the resumes that I'd sent out and how fast he'd called me. So he says to me, you applied for all of these financial related positions. He's like, but your degree, he's like, why psychology? And I was like, I didn't have really an answer. So I just looked at him and I said, it was a major at the University of Minnesota with the best looking girls. So the guy says to me, I'd like to extend you an offer of opportunity of employment. So I said, okay. So then I get home and there was another branch in Minnesota at the time. Mm-hmm. That branch manager calls me. Amazing. And then somebody from like an out-of-state branch, I'm like, what the hell are these guys doing? But that's just kind of how aggressive, mortgages were back then. It was kind of when it was the inception of subprime, right? As an institutional asset class. So it was interesting. I ended up, taking the job as a loan officer. I was a salesperson for 10 months, and then I went into management. And that's almost 30 years ago. So I've stayed in management, but that's how I got into the mortgage business. I had no idea what a mortgage was back in 2012, 13, when you and I met, was really, so that from then on, I've exclusively been in the residential investor loan market or the private lending loan market. That was the inception of a firm by the name of Jordan Capital. And it was really when institutional money started to come into our space. And we sold that business twice. Yeah. So we built it. We sold it the first time to a mid-market private equity fund out of Manhattan. And then we sold it again in 2017 to Blackstone, at which point it was merged with a platform by the name of B2R and became half of what was Finance of America Commercial. So, and then if you go later that year, fourth quarter, I got together with some of the partners at Fay Financial and we incepted Constructive. So started it with 2 employees, me and one other employee in some basement office in one of the owner's, facilities. Now we've got it to the point where, it's 200 plus employees. We do anywhere from 750 to, 1,000 loans a month. We're certainly a leader in market share, at least in certain asset classes in the space. And That's kind of the quick summary.
I love it. I love it. There's so much to unpack there. Funny enough, I'm going to go way back, right, to where you're a salesperson and within 10 months,
Yep.
you get into management. Like, you must be doing something right. They was like,
Yeah.
Ben, it seems like we need a manager. 10 months in, just go for it.
So again, I had no idea what the mortgage landscape looked like. And interestingly, it was the second or third month. And this was the AmeriQuest companies back in the day. So it was big still. I was a top producer or second top producer in the company. But that's just how it was back then, right? I mean, it was a super hyper sales environment. So if you had somebody who was doing well, generally they were promoted, and then your life becomes difficult, as you know from
Absolutely
from being a business leader.
Yep. Yeah, absolutely. And so they see the seeds of that. You're growing. Tell me about management, right? Because you're not producing anymore. We talk about scaling, right? These are this kind of seeds of scale.
Yep.
You're not producing anywhere. You're now leading a team. You're managing them and kind of inspiring them to do what you did, right? It's funny how we take people who are crushing it. Oh, they'll make a good manager. But that's a mental shift, I think, not just from doing, but to managing and showing people what you did for success.
1000%, right? I mean, you ultimately, you've got to buy into the fact that you're not going to be successful, right, unless people underneath you are successful. And it's not, a function of being altruistic. It's a function of where you get outcomes from. So, you've really got to be, that's really got to drive your belief systems. So you do have to shift your mindset. And the other thing you've had to shift from, I'm talking mid 90s, right? Yep. That was a hyper sales environment. Mm-hmm. It was yes, sir, no, sir. I mean, you take what the typical employee profile is now. I mean, you could never lead anybody that way, right? Especially after COVID, right? So I think, like, if you look at the current generations and you just look at the employee base post-COVID, like that's a much more sensitive management dynamic. And I think the way that I look at it, and I have always considered management and leadership two separate, distinct systems of action, right? But like back then, they were kind of a lot closer. Like, your leadership was just managing the people. You've got to do this. You've got to hit this number. You've got to hit this outcome. And I've seen, like, over time, I think I've started to think about it like much more divergent, right? Where, like, leading people is go look at what people went through COVID and thereafter. Right. And you still have to obviously manage a business that's scaled. Mm-hmm. I mean, we've got 200 plus employees. We're super efficient. We do a lot of units. We're known in the industry for doing a lot of units. So, obviously there's a huge management component to that, where you're obviously doing a lot of measuring and a lot of analysis, but you've got to cross-reference that with the leadership side, which is people's priorities, in terms of your team members, have changed. And I like a lot of employee feedback, whether it's like concepts like scale or just in general. And I have we call it breakfast with Ben. I call it breakfast with the president. But so we try to do it once a quarter or once every other month. And it's an interesting concept because I have like 7 people. And I get good feedback for whatever reason, that number ratio, like the barrier kind of drops. No one will come into my office generally one-on-one and give me feedback. I found, but interestingly, we started to do these. And one of the things we talk about is like, hey, what's important to you? What are your priorities? Right. Yeah. And I'm going into that somewhat, with a mid 90s mortgage management DNA. And I'm thinking, okay, money, career advancement, that's not what the priorities of today's employee base really are. And then you've got to ask them, right? And you've got to really appreciate that. You've got to lead to that. That's how that makes it easier to be efficient. It makes it easier to scale. But ultimately, there's some mindsets that you need to adopt, but it's about the people.
How do you grow your people, right? Because it's not easy for me, at least. I've known sometimes the people change, especially as you go from 0 to 200, right? Your company is different in a lot of respects. And as you get up there,
Yep.
your people are different.
Yep.
You go from managing to growing to inspiring. And kind of when you get even 100 employees, right? Because we have about 100 in my company. You go from knowing everybody to just knowing your management team, and maybe as you said, some people that may have breakfast with you.
Yep.
What's that like as far as leadership that you want to instill your values and culture and put it into your system?
Yeah, look, I mean, I think you've got to spend a lot of time on feedback, but to your point, you've got to do it programmatically, right? Because you can't go talk to 200 people. And look, even, Constructive, I mean, we have a offshore contingency, right? I mean, and they're important to efficiency, scale, production,
right.
Cost management, right? So like, I can't, it's not practical for me to be able to go get feedback from every employee. I mean, I'm gone 2 days at a conference. And so you've got to wire it into your operations and into your culture, through processes, and, it's got to be a longer term commitment. So, we do look at the things that I think most good companies do, employee surveys. We do try to, do some things where we, just change the framework, like the breakfasts, where, it's a little more conducive to get feedback. But I'll tell you the other thing we do, like this is, the Slido app is, we use it at conferences where you can ask questions or provide feedback on panels and presentations anonymously.
Absolutely.
So we open that up for our quarterly meetings, and we just let the comments and questions come in anonymously.
I love that.
So, and my HR people told me I was crazy, right? Because you got 200 people out there that that aren't always happy all the time, but and you look at like the culture in terms of mortgage banking, where we operate. Look, they're obviously rate cycles, have led to layoffs. So a lot of that, they've experienced. If you've got experienced people. So it's like, and then you've got sales and underwriting. So you've got this natural conflict that all are, it's a tough cultural business at some level, So sometimes you just kind of open up the spigots on anonymous feedback, and you're like, okay, you all of a sudden, you're either getting questions that are difficult, that your leadership team is taking on candidly, or you just, get these, or you get the 100 smartest people in the world, right? Telling you what you're doing wrong.
Oh yeah.
But look, I mean, I think that transparency really correlates well to what, my perception of what the priorities of the employee base are now versus what they were when I started.
Yeah. No, I love that.
It's been fluid, right?
Yeah. Oh, absolutely. And people, as times change, people's focus changes too, right? At least, when you and I are cutting our teeth, you're staying till 11 p.m. What's this work-life balance thing? That doesn't exist. Like, you'll be here at 11 p.m.
I don't know that it still exists for me.
Me either, by the way.
My wife would say no.
But, work is passion, and it provides a lot. So you and I are, maybe that's our clock, but a lot of people are now looking for that work-life balance. And as employers, like trying to harness their strengths and try to deliver that has just always been a difficult thing for me.
No, you're right. So it's this emotional intelligence component of like, look, if things are stressful, you and I get lost in our work, and it's healthy. Like, well, I don't know if it's healthy, but it at least is an outlet. But not everybody feels that way, and I think you gotta know your people. But I mean, if you're going to assume that, even some of your senior leaders, right, like they may have a different perspective, and that doesn't mean that they're going to be any less effective or committed. But I think, at this particular point, if you're not, if you don't have a plan to manage work-life balance, like in today's professional landscape, I think you've got some issues, right?
No, absolutely. I love this. I love it because you're one of my first podcasts as far as focusing just on the employee aspect, which I know you got a lot of knowledge of.
Yeah.
I want to pivot a little bit to the first time or second time you sold Jordan Capital, because that sell part, right, of build, scale, sell, that's kind of the end goal for a lot of people.
Yeah.
And how is the process? I mean, you scaled this to a point and you're getting to sell.
Yeah.
What was it like the first time, second time?
It was interesting. The first time that we incepted the business, we actually had Evergreen Capital So, to the point, as opposed to like private equity capital where there could be some nominal expiration, right? It was just, so we really, kind of sold it opportunistically, maybe a little more than need. So at that particular point, I mean, we didn't really build it to sell. I mean, we just tried to build a good company. The industry was new at the time. So I think like to just kind of step back and strategically plan was difficult because all of the tactical things just kept changing with the industry, right? I mean, we had one of the first institutional, credit facilities in the industry at the time. So just kind of, it was new to Wells Fargo. It was new to us. You just kind of lost yourself in operating the business. And then, these asset classes became more popular. That's when we sold it the first time. When we sold it the first time into private equity, we had some great partners out of New York. But when we ended up transacting again in 2017 to Blackstone, it was partially that they needed to do something with this B2R asset that they had. And that fund that we were in was coming up, in terms of expiration. So it was, but I don't think either time we spent day-to-day operations or day-to-day leadership communication on how do we sell. I will tell you that once you decide to go down that road, then you've got to do a lot of planning in terms of you don't want your volume to go down because you're obviously trying to grow into a sale, or you don't want that weakness anywhere in the process. You're obviously trying to keep the level of drama down, more than you might organically. So there's some planning around that. But ultimately, I think you run the business to the best extent that you can. And that's probably, even in an M&A, you get the best outcome. I mean, you hear like the public companies saying, well, we don't want to over optimize because we want to give, somebody some upside after we didn't look at it like that.
I think that's such an important point, especially as people start approaching sale, because the whole thing is, let's optimize for revenue. Let's optimize for sales. Let's stop research and development. Let's cut to the bone.
Yeah.
And now I get the best sale.
It's a fool's errand.
Yeah.
Look, from my perspective, and I've been involved now in 4 M&As and 3 startups in this space, and I've just never taken that approach. I mean, I think if you do things the way that you want to do them, you're going to grow the enterprise value, right? And look, and your enterprise value is always subject to a lot of things that are outside of your control, market conditions, right? The interest rate environment, cost of funding for M&A, so if you really are, trying to feather your day-to-day operations and strategy and tactics into that, that's like trying to time the market, right? It's wouldn't recommend it.
Absolutely. Yeah. And now you're doing it again, scaling Constructive. Yep. And, you're really just making a market with a lot of the products you're doing, which, I've always been inspired by. You really do best in class. You look for how do I continue to deliver value, not only to borrowers, of course, but your investors as well, and really try to drive that cost down and keep origination up. Yep. It's amazing on how you consistently do that time and again. Do you have any advice to people looking to scale?
The way that I look at it, whether it's your business or the leaders in your business, there's probably 3 milestones. The first is, you kind of just, you start to operate, or if you're, new to whatever concept you're trying to scale, you just do it, right? And you don't think about much. And that's a productive time, right? Because you're not getting in your own way, which in a lot of cases, as is the biggest problem that most businesses, and people for that matter have, and then what happens is you start to get really smart about what you're doing, and you're like, wow, I can do this much quicker, or I can shortcut here because I'm smart. And then even on some of the things that you were doing before and you find out that others in the market are doing it differently, you start to have doubts, right? And you kind of get in your own way, and you're like, well, if this competitor is offering this or doing this way, maybe the way that we were doing it, and it didn't bother you when you didn't know any better, and that's that second level. And that's where I think a lot of companies can get to that level, but it's the third level of where you go, okay, let me take a step back and intellectualize this and go, I know that I can get a lot of smart people here to do things fast. So if it was me and my leadership team, yeah, we could cut through every loan or every exception on every loan or every strategic decision extremely quickly, but obviously you're limited, right? Just logically. So you've got to buy into the concept of, okay, look, I mean, we've got to get this done with 200 employees. And those 200 employees, look, they may not all be executive. They're not going to be executive management, right? So, and you've got to invest into that. You've got to believe into that, and the other thing that you really have to do, there's a Japanese term from Six Sigma and Lean by the name of Kaizen, which is just constant iteration through trial and error. So there is a seasoning period to me, because you've really got to get those reps under your belt. I don't care how good you are, right? In order to optimize. And that's where people always come to me like, hey, are you worried about, somebody coming into the space and disrupting, like, some of these big conventional mortgage bankers? And I'm like, no, at least not in the near term, because until they go through those reps, I mean, you're just, it's going to be, there's other things for me to be concerned about, quite frankly.
No, absolutely. And, I say it occasionally, but Mike Tyson, has one of the best quotes. Everybody's got a plan to you get punched in the face.
You get punched in the face. Right. But that's why you've got to iterate, right? I mean, so you got a plan, and, no mortgage banking business or student loan business or any business has ever, been successful on Excel, right? So you can model everything. I mean, I'll go tell my board I don't have much more than 60 days worth of visibility, and I've been doing this 30 years. I mean, look, you got to do some planning, longer term than that. But the reality of the matter is, to your point, you get punched in the head, like what you're, have on an Excel spreadsheet, over the next 12 months can completely change. And we've seen it. COVID, capital markets ceased to, function. Global financial crisis, capital markets ceased to function. Yeah. What the hell does my, 12 months worth of projections on Excel, mean at that particular point? So I think, you do your best to, insulate yourself, but when markets capitulate, there's not a lot of planning, right? So it's like when you get punched in the face, you just have to respond. Right. And there's really no good plan at that point, right?
No, you've got to figure it out. I mean, again, the thing with the law firm during COVID, of course, as the mortgage industry gets punched in the face, I mean, we're at a standstill.
Yeah, I remember.
There
was no legal work, right? And then, but what you also didn't know is that you were going to come out of this in 2021, and it was going to be the most accommodative market ever for us. Yeah. Right. So it was like, you just, at some particular point, and I'm certainly not, look, we plan. We take a lot of time planning, which is a lot of time planning strategically, et cetera. But look, at some particular point, the factors get too big and you just have to react to getting punched in the face. And I think that's, I think if you could somehow prepare for that, you can't prepare for what you're going to do, but you can prepare getting hit, I guess, and just know that you're going to have to pivot. It would probably be good advice.
And have you had to pivot a few times during different things? But
look, I mean, I've been through a number of crises, right? And which is interesting because, but if I just took like the major crises that probably most of your viewership would be familiar with, well, there was a global financial crisis. Yep. There was the first week of March in 2020, which was COVID. But then the other crisis, which was a little more organic, but equally as bad, was when the Fed started to raise rates in the end of the first quarter and second quarter of 2022. Yeah. That really caused a lot of issues in our markets, and that's where Constructive picked up the most market share when markets were difficult. But what we ended up doing back in 2021 was we got into some direct life insurance relationships, generally for our DSCR loan products. So when the securitization markets and capital markets and the fixed income markets really ceased to function properly or at all, we did have some insurance money at the 2022 level. Mm-hmm. So what you saw then was not a complete liquidity crisis, but you saw a lot of market participants trying to price their loans 200, 250 basis points off of prices that were offered on loans in process.
Absolutely,
and we were in some pretty efficient constructs at that time, which allowed us to be steady. And we picked up, that was a big move for Constructive at that particular point. But the reason that we went into the insurance relationships, this gets back to the point of getting punched in the face, is in March of 2020, we had loans on our balance sheet. Markets ceased to exist. Ended up selling them to Nomura, actually. We might have to edit that out. We ended up selling it to Nomura, at a loss, because that's where the market was. It was fair. It was a fair trade. But, so we lost some money there. And, as we were going to move on, we talked to one insurance company and they said, if we had a forward commitment together, we would have funded right through that or whatever. So we went into the forward commitment, but everybody was paying ridiculous amounts of monies for a loan in 2021 because of the market. Right. And people would come to us and go, why would you sell for this to an insurance company when you can sell to, other constituents at a higher price? And I said, well, because March of 2020 is the answer. So, we did some planning after that. It was funny because we stopped funding. We funded a few loans that the liability of not funding them was probably more than funding them. Mm-hmm. But we had people calling. We paid back. We deal generally with brokers and third parties. We went back to the underlying borrowers, paid earnest money that they'd lost. We spent $500,000 in damage control. So when the market started to come back at the end of 2020, before it started to really rip in 2021, we had a lot of momentum just from the fact that we had just kind of really focused on damage control, client experience, even through really, time where the market had capitulated, right? Mm-hmm. So you learn those lessons, right? It's like, but it's hard if you don't learn them, and and I've been through crises, and it's probably, I would say, if I had to go back, like those are the times that I think really defines, how I think about things now, probably more than anything else.
I absolutely love that. So many great nuggets there. Preparing for the worst, right? And you actually increase in volume as a result of that during when the global...
Every time the market conditions get tough, we pick up more market share.
Yeah, as a result of those
decisions. Seems like anyway.
Yeah. Because everybody else says they didn't have that experience. They didn't have, they should have, but then they didn't learn from it or didn't go forward on it.
Yeah.
And as I like you said, what you said before is you're constantly iterating, you're constantly remembering and internalizing or maybe institutionalizing those lessons, which is awesome.
Yeah. Look, I'll tell you that so ultimately your people are still what makes it sing, right? And your people are who take care of your clients. Your people are who, to your earlier point about your stakeholders at large, get the best outcomes and enable you to be accountable to your stakeholders. And it's, you go back to the mid 90s when I started, as a young manager, I used to look at the body of a resume like, okay, what's the experience? What's the experience? What's the experience? Because I knew that I could potentially get that person into my operation. The curve would be short. And I've shifted that. I wrote an article, I think, in Private Lender about this. Like underneath where the name and the address are on the resume, there's like this kind of tagline of like hardworking, critical thinking. Yep. Everybody has it on there. But that's what I look for. And this space, it's great in our space because relative to, let's say, conventional mortgage banking, which is a very narrow operating channel, right? Because of the compliance and regulation around it. there's a little more wiggle room in private lending. So you have that ability to empower people and empower those qualities. And that goes a long way, because all of the stuff we've talked about with scale, efficiency, in turn, cost management. I mean, the worst thing you can do is turn over, because then you lose, some of the foundation of all that iteration we just talked about, because like that person's gone. Right. Not that you don't have it in your processes and those types of things, but you can't replace personal experience of somebody who's kind of gone through the trial and error with the process, right? There's a lot that goes into culture, turnover rate, and those types of things that, really turn out to be the most important.
Absolutely. Well, as we start to wrap up, is there some advice you can give someone, maybe building, lending a business, or any business really, but lending, as we know, that's about to scale? What would they look out for? What should they do?
Yeah, I'd say, number one is there's a couple traps, right? The first is don't try to run your business to sell it to somebody else at some future point. Yeah. I certainly would discourage that. So build a business the best that you can build the business. The other thing I would say is, and you may not have to think about it in the 3 steps that I think about it in, but just, you've got to be cognizant and aware of that point, right? Where, okay, look, I'm smart. We can do things really quick, right? Now, there's benefit to that, right? So like if you're, working on a loan and it needs some type of exception, and you've got a client on the other end, and, you blow it through your leadership team, but if you ultimately get stuck there, you're in trouble when it comes to scaling your business. And the other thing that I would do is, I would look at some type of efficiency model. Constructive, we gravitate towards Lean and Six Sigma. Doesn't have to be that, but there's like a lot of good concepts to kind of keep you honest there, because shortcutting things or kicking the can down the road, like all of these things that are cliched, I guess, are definitely, in my opinion, detractors from scale.
Absolutely.
So I think those are a couple of things that you can look at, and I think, whatever type of business it is agnostic, right? I mean, I think it's pretty universal in my opinion.
Absolutely. So 3 books. It sounds like I heard 2 of them. I want to give you 3 books you'd recommend someone to read.
So I'm a Jack Welch guy. I mean, started my management career in the 1990s. So I would definitely read Straight from the Gut by Jack. He's got another book called Winning, which is a little less of a biography and more, I would say, it's probably more business driven. There's a book by Larry Bossidy by the name of Execution. It's not an easy read. It's, you got to get through it. Now he was at GE with Welch and then went to Allied Signal and Honeywell. You got to kind of right size those books to today, because they were very confrontational, and there was concepts in there that you really couldn't probably pull off. But I think, you can make the translation pretty easier. Good to Great's a good one. There's other, I read a lot of books that are general performance. A lot of them I read for golf, just to be honest. But there's a book called Golf Beneath the Surface. And if you're not a golfer, it doesn't matter. I mean, it just kind of is, relative to any performance domain, whether it's business, whether it's golf, whether it's public speaking, it gets into the biology and the neurology of the brain as opposed to psychological based concepts. So it, kind of the conflict between like your old brain and your new brain, and, what kind of mindfulness, techniques you can use to optimize that relationship. It's very interesting, quite honestly, because it's not like your same old psycho, like that one. I read some books by a sports psychologist by the name of Brett McCabe, Brett McCabe. He's a sports psychologist for the University of Alabama and some others. you can generalize those concepts. I've recommended those books to others who aren't golfers or athletes, and those are a few.
I love that.
I mean, but I'll tell you that I would read, and this is just me, and depending on your business line, this might, because I've read like the Lean Startup, for instance. I got a tough time with that one for mortgage banking. I think it's interesting concepts, right? I mean, the minimum viable product, like. I just like the old school leadership books, to be completely honest with you. I'm waiting for Jamie Dimon to come out with one, but I don't know if that's going to happen soon. That's definitely, the guy that I look up to now for sure.
Absolutely.
And there's others.
I love those recommendations. So I always want to ask this question. What does scaling mean to you?
To your point, it's subjective, right? There's no like definition of scale, but I think at the end of the day, if I were to define it, it would be, where you just take, it's the intellectual transition from, okay, look, we're smart enough to do all this. We know it all. We know the content. We know how we can do it quickly. And stepping back from that and saying, the real intellectual path here though is, we've got to be able to do it via these processes. We've got to be able to do this with 200 employees who, may someday be executive leaders, but aren't now, right? And we've got to be able to do this at a reasonable basis that we couldn't do with all senior leaders. And, obviously you could see where the former is self-limiting, right? It's that transition. It's milestone 2 to 3 in the example I gave before. I think that's how I would think about it. And to your point, if I was going to try to start a similar business and not scale, and there's good, look, we have a lot of conference, at the conference we're at now, there's a lot of great businesses that are not scaled businesses. Absolutely. But if I was going to do it the other way, I would just stay in that, smart shortcut, but like, I've just been a scale guy for so long that, but I have had a lot of people in my career that have worked for me, talented people that just couldn't get over that second to third, level transition. And, it takes some commitment because it's frustrating, right? You're like, well, we could do this way faster, but you've ultimately got to be able to put it into a system and processes, that will enable quote unquote scalable growth.
Absolutely. Well, if our guests want to find you and Constructive, how would they reach out to you?
Yeah, look, I think the easiest way is just constructivecapital.com. You could reach out to me directly, quite frankly. That's Ben Fertig at constructivecapital.com. But we'd love to hear from anybody. I mean, generally we work with mortgage brokers or third-party originators. To the extent that you are borrowing directly, we will take care of you and put you together with one of our top clients, we're confident that we can get programs, terms, and prices that are as good as anywhere that you can go direct through our client base. So feel free to reach out.
Love it. Well, Ben, thanks so much for being on the show. Always love hanging out with you. And also, we're learning new things. Every time we talk, something new comes out.
It's great just to have a conversation because we don't get to do it enough. So.
I know. Well, we'll do it again.
Maybe over a drink next time.
I would love it. Well, thanks. And that's another episode of 4200% Build, Scale, Sell with Anthony Gerasi. I'll see you guys for the next one. Thanks for tuning in to 4200% Build, Scale, Sell. If you got value from today's episode, follow us on social media, subscribe wherever you get your podcasts, and leave a review. It helps more entrepreneurs find the show. Until next time, build smart, scale fast, and sell on your terms.